Welcome back, everyone. As some of you probably know, a while ago I covered different uranium equities specifically on this channel and said a few words, a few thoughts about, well, many of them. Since then, a substantial amount of time has passed, and there are some that are quite different, and there are some thoughts on uranium in general that's quite different. And if you put those together, you have a few different results. Now, I am not going to be revisiting every single one that I covered last time, but there are a few that are maybe of interest to me now, or I own, or something like that, and they could use a bit of a refresh. So I will be revisiting some of them in a series, and today's video is more about the general types of changes that have occurred to many. So before I get into all of the things that have changed over time and reasons for the difference in a portfolio, I just wanted to first mention that sometimes it's you or the market that changes. Sometimes there's a volatile shift and one company goes up a bunch, another goes down a bunch, and you decide, oh, I'm going to go with B instead of A. And sometimes you just are like, you know what? I didn't really like, I don't know, it's just not speaking to me anymore in a thing. And sometimes you're just wrong. I mean, I don't know, maybe you're not wrong. I've never actually met anyone who's never been wrong. Well, maybe one person. But anyway, I've been wrong plenty, and sometimes I just have to face the fact that on a certain position, I was wrong, and I was wrong to have liked it over something else, and sometimes you just have to accept that, move on to the next. And that said, sometimes there's something that someone says, maybe CEO in some interview or some whatever that just gets on your not gets on your nerves, but like makes you think, and eventually you can't even say why, but you change your mind on something because something got something was bugging you about it. Other times the story shifts, or there's some financial decisions that gets made that you just very much disagree with, and you just push the company off of your list for a while. And so yeah, that's just what I want to say. There's a lot of different ways that you can change your mind on something, and sometimes it's just you relative risk in the market. You just don't feel like taking a specific type of risk at a certain point. And if that's the day that you're looking at entering a position, then that's just not going to happen. So in addition to all the well thought out reasons that I may mention or that I miss, sometimes there's other things. So the first large and general shift that has happened over the past few years, really, is the uranium market went from one that the bull thesis was, okay, well, the market's going to see what's happening and then fix itself, to, okay, they'll figure it out later. And what the difference is the they'll figure it out means that things will take longer. And not only means that things will take longer, but means that the base case for what the cycle might look like would be probably a more sharp rise when the day comes. Now, this obviously means that the sector gets more bullish over time, but also means it's taken longer, and that has had an impact on many equities. Now, what are some results of this type of slow shift? Because it has been a slow shift. Every day the cycle looks slightly different, but add enough days together, and it gets me thinking that, well, it's better for higher prices because, as I said, probably means that eventually when the price moves, it moves more steeply. And it's less good for the things that are potentially a bit more down the line in terms of they might miss the cycle. It's a risk. Now, obviously, there's a number of things that need to happen and another number of things that will be in the cycle and many things will benefit from higher price. Almost everything will um, have a better cost of capital. Let's go with that. Anyway, so ready and uncommitted projects, uncommitted pounds have benefited, especially as it takes longer and to different degrees. The more ready you are, the more uncommitted near-term pounds. To different degrees, that changes the bull case substantially in, well, over the past few years, really. Now, it feels so long ago, and I don't know how many of you are new to uranium and how many have been along the ride for a while, long enough to know what the 232 investigation was and remember the massive procrastination on every front that came along with that. Well, that has slowly, still not faded completely from the market. But that being said, if you look at the US uranium names, there are different levels of impact that have been seen and different premiums that were existing and had a potential reason and now don't. And so the the premium for uncommitted US pounds has the deserved premium, let's go with that, has decayed to the point where I don't really see that it should exist. But it's not, I don't think it's completely gone in some instances. Now, that being said, US, nice jurisdiction in many cases and good place to produce uranium. Sure. Should there be a premium? Maybe. But my point is that the Section 232 premium should probably be gone at this point, and that has been kind of a slow grind out. Risk. This is a big one because it shows up in many fronts. Sometimes it is spending more, sometimes it is higher burn, sometimes it's the type of company it is. Risk could show up in many different ways. Maybe it's the amount you're willing to pay for management. For example, who knows? We've gotten to the point where, I'll say it like this, more stupidity is allowed. Not, obviously, I'm not buying anything that I think management is completely out to lunch or doing something more dishonest than what is a commonplace. I'm trying not to be too mean here. But the point I want to make is that if there's less ways to mess things up over time, you can kind of take more risks. If you think there were indeed less time, there's less ways things could go wrong, less ways that spending can dilute you before the turn happens. You can take more risk. You can buy companies with higher burns. You can more leverage, more exploration risk, more you know, you can have the company spend more money. The next point, this is kind of intuitive and very specific. And I'm not going to name any names here, but if you think about it, if there is a premium for stocks that should be ready, then the stocks that are almost ready are almost at a point where they deserve the premium. So if a company has gone from almost ready to ready or almost ready to basically ready and add in a bit more time, there's been some value shift there. So once you add that to the fact that there's more likely going to be more of a premium to be ready when the time moves or almost ready, and higher value on producible pounds and higher sharpness of the price move, well, then you can kind of get some ideas of how things could change in fairly significant manners over time. So a few comments on geography, and this isn't necessarily something that's changed, but more so something of, as the market has gotten to where we are now, what am I thinking it looks like? And The first point I'll make is, especially if you take into account a few of the things I've said already, I still think the market is sleeping big time on Africa. Now, am I biased there? Probably. I own a lot of Africa-based investments. Why is that? Well, because I think the market is sleeping big time on Africa. That being said, it's not only Africa. There's many places that are still cheap, and there's many places that will be needed in the coming years and decades. So there's still, we haven't seen much, well, we haven't seen any real consolidation in the US. So there's still a lot of US companies, especially, actually, there's even more now, especially when you compare it to the number of producible pounds that are in the US. So I still find that a tad saturated. And well, Athabasca Juniors. Athabasca Juniors will absolutely have their day in the sun in Canada. When? And this is the biggest, well, not the biggest, but a really big question in the coming cycle is exactly when will those Canadian pounds, high grade pounds, very valued by the market pounds, be producible? And if you're a bull, well, if you're a bull with diversified portfolio, you definitely want later because, well, if you look at the cycle, if it takes much longer, that's very good. But, you know, I'm not the person in charge of how long permitting takes. That's a government. And so I'm sure that will be done as quickly as possible. As I've alluded to a few times in this video, the sector, literally the shape of the cycle, I guess you could say, shifts daily. And while every small move, most days, is incredibly subtle, over time it does add up and significantly change the story. And so my portfolio personally has changed significantly over the past few years, not only by additions, but by subtractions and changes and mistakes. Honestly, made some mistakes, um, cut some positions, put the money elsewhere. I was wrong in some cases, and some hedges or holes in the theory are become less relevant or potentially less relevant over time. So I don't feel the need to have as much exposure in certain areas. So I think it's rather justifiable, given everything, that my portfolio has changed, well, since a few years ago. And but that's just how it goes. And kind of lastly, I just want to make some comments on what I sort of see how the market sort of seems to be working and preferring. So it seems to me like the market has a trickle down bias in that the money goes into the larger names and then the smaller ones. But there is things do move at approximately the same time and in very similar percentage terms over the short to mid-term. Now, there are still some obvious large differences, but my point is simply I don't want to be too stressed and too combative with which names to buy and which names to avoid, because realistically, they all seem to move very similarly. And for sure, there are some theses out there that I much prefer to others. Sometimes I just don't understand really the value of a stock, but someone else does. So who's to say who's right? Now, I say that initially it seems like the hype is in Canada, but that's where many of the large companies and large assets are. So that makes sense in the trickle down theory. And I think that we'll see over time how when the market starts thinking about timing, who can buy out what, who wants to buy out what, at what price. I think that we'll see a bit of a distinction then, but for now, it's just people just grabbing in positions and kind of getting situated, and I don't think the market is really thinking too much about that type of thing. But as money flows, money flows. And that's it for today's intro video. Next time you see this cover to a video, it will be on a particular uranium company, and the next few times will be videos like that. And remember, those want to be investment advice, because this is not investment advice, and that is not what this channel is. So until then, have a great day.